Hey guys, Dave Keller here with Market Misbehavior. I'm looking at the airlines group, particularly American Airlines. It's been a nice rally off of the lows, but how can we differentiate between a short-term mean reversion type of rally with something bigger and more significant? Today we're going to talk about why we think about multiple timeframes and how you want to bring in more data to have a better assessment of the overall trend. So a lot of times when a stock bounces off the lows, I get asked, all right, is that it? Is that the bottom? And I always have to sort of qualify it by saying, all right, here's what we know so far. Here's what the future could hold, and here's how we would confirm that a short-term rally becomes a long-term, what I call a change of character, which is a significant rotation from distribution phase to accumulation phase or accumulation phase to distribution phase, right? There are things you can look for, indicators on the chart that confirm that it isn't just a short-term mean reversion, but something maybe a little more significant. We're going to look at the chart of American Airlines here in a minute. Before we get there, if you like this thinking about market history, investor psychology, technical analysis, behavioral finance, I hope you'll subscribe to my channel. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Do you like the chart of AAL here? Yes or no? Let me know why in the comments. Look at the chart of American Airlines for the last year. It reminds me a lot of the chart of small caps, right? Look at the IWM, for example. Sort of sideways, right? Look at where we're at right now and look at where we were in May of last year. It's about the same level, right? You can draw a straight line across. So when we talk about this market being in sort of a bottoming phase, charts like this certainly come to mind, where the last 12 months have been choppy and noisy at times, but directionally, it's really been a sideways trend. I think that's the exclamation point on that thesis is what you see on the chart right now with the moving averages and the price all right about at the same level, around 1450 for American Airlines. So what we're seeing so far is that AAL traded down to support, right? It first sort of reached this level around 1250 in June of last year, retested that level in September, October, undercut it just a bit, but I would consider that a retest of the lows. And then a bounce. We had another test of the lows in December. We traded higher, and now once again we're back within a rounding error of these lows. So I would consider this in April yet another test of this support range. So pretty clear that when we get to this price range that buyers are coming in, right? That there's demand for the stock at this level. If you look below, you see a couple indicators that confirm sort of this short-term bounce. You have a bullish divergence from the RSI, so lower lows in price, higher lows in RSI. We just recorded another video, I think last week, on the RSI divergence. I'll put a link in the description if you missed that one. You also notice the indicator at the bottom is called the PPO, or percent price oscillator. It's very, very similar to the MACD indicator, just a nice little subtle improvement to that methodology. But when the MACD or the PPO indicator is below zero, farther the better, and then rotates higher with the MACD or the PPO line crossing up through the signal line, that's your classic buy signal. And you can see a number of these happened off of those tests of support. So once we test that support range, you wait for the buy signal, and that has often been a pretty good signal. So it's been a little noisy here in April, but overall now it's rotating back to the positive side, suggesting we're in recovery phase. American Airlines just got above its 200-day this week. So is this a strong chart? Does this have further upside potential from here? I would argue that you really can't answer that using this particular chart. And this is one of the great, I think, challenges for new investors using technical analysis, is you don't think about when to bring in more or less data. One of the great, I think, approaches of the more experienced analyst is when you immediately look at the chart, you start to be able to answer the question, do I have enough data on this page to be able to answer that? I think the best you can use this chart for is to think whether or not we are most likely going to retest the swing highs. And I would say, based on the limited information I've shared with you, probably pretty likely, right? The fact that we've had the bullish divergence, the PPO buy signal, we've bounced off of support, and we're back above moving average resistance, which is now ideally becoming support. Further upside to those highs is fairly reasonable. That would stay within this range of what we've seen for the last year. But now when we bring in a little more data, now we're looking at the last 2 years of data, now we can see that this period we were looking at is sort of right here. We're now paying attention to not just this bottoming phase, arguably, but also the fact that it came after a long-term downtrend. Now we can draw a trend line from longer term highs and recognize that those peaks we talked about in February and March, those were actually another retest of sort of this overall downtrend that started in mid-2021. And I'm connecting the June 21 highs, the April 21 highs, and the January and February 2023 highs to create this trend line. So what I would say is when you sort of look at the trend over this time frame, you can see that we're bottoming. But even if we rally a little bit, until we get above that trend line, how bullish are we really? Do we really think the long-term trend has changed? And I would argue until we get above there, it's still a question mark, right? It's still an open question with potential to break out, but that would be the confirmation, the validation that the breakout has already occurred. I also have this blue dashed line, and this is actually based on two different levels of resistance. The first one is I'm just keying in on the high from January. We saw that on the previous chart, right? We're sort of at the upper end of the range. If we trade up to 1750, we get above there, that would take us to a new, new high for the year, and arguably a new 12-month high, depending on how far we would actually get. That is a meaningful rotation. That's not just a bounce off the lows. That is showing you that buyers are willing to pay more and ever more for the stock, pushing the price higher. So breaking above that level, around 1760, we'll call it, could be pretty meaningful. That also happens to be a Fibonacci level. So if you take the June 21 high, which we used as the start of this pink trend line, take that as the high, you take the March 2022 low as the low, and then look at the retracement levels between those two, you'll find a couple things. You'll find that in that rally in March, April of last year, we actually traded right up to the 61.8% retracement level. Look at how well that lines up before we rotate lower. You'll also see that the January 23 high is right at the 38.2% level. So again, retracing 38.2% of the way back up to the March 21 high. So what this tells me is if we break through that trend line, which I think would be bullish, once we get above this level, which means we really need to get just above there, probably above $18, that would complete a rotation, not just above moving averages, not just above the trend line, but also above price resistance and a Fibonacci level that has served as resistance a number of times already. So this is how we differentiate the short-term movements, the rally off the lows, with taking a step back and really thinking about the bigger picture for particular charts. This is just a taste of what we call multiple time frame analysis, not focusing too much on one particular time frame, but looking a little short term to understand the shorter term dynamics that are creating that chart you're looking at, but also the long term, giving you the context and understanding how the period you're considering relates to the larger overall trends. I think when you do that sort of analysis on American Airlines, you get a sense of the potential for a further rally from here up to the February highs, which I think is fairly reasonable given the move that we've seen so far, but also the validation, the further confirmation I would need to suggest that there's further upside much beyond those January, February 23 highs. By bringing in more data, we can really have a better, broader assessment of the overall supply and demand picture for this particular stock. What do you think? What do you think about AAL after going through these couple charts and thinking about multiple timeframes? Let me know in the comments below. Also, don't be afraid to subscribe to our channel. We'd so much appreciate it. And give the video a like if you appreciate it. We would very much appreciate that back. For Market Misbehavior, I'm Dave Keller. Be well, be safe. I'll see you again soon.